did mention here on the Tuesday that we are overextended, and we had some gaps as well developing here that I felt would lead to some sort of pullback. And it was normal. It was a normal pullback, in my opinion. It's still a normal pullback. We're around the 10 EMA, nothing to worry about. We're around this lower band of the channel, the ascending channel that we've covered here for a number of weeks, and it needs to hold here. In reality, we need this to hold. If we go back to the 20, we are now in the setup that I mentioned in my previous videos, a distribution-like setup, okay? Something like this, and then boom, okay? I already mentioned that, and then maybe we rebuild. So we've covered that in the previous videos, and I've tried to warn you of this potential overextension here in the market, being a bit too euphoric, too quickly on just some news on the tariffs. And then with the interest rates decision coming out, what Jerome Powell was going to say was going to be the key thing to watch out for. He cooled down further interest rates so that the price came back down. Now, it doesn't mean that we're selling off completely. It will have to build structure, and there'll be other events that we have to monitor in the next few days and weeks, as well as earnings that we're looking at. So overall, this is the kind of the situation that we're in. We are in a worrying territory here on the other side with relative strength slowing down. And what we need, like I said, is a bounce. We need that if we want to keep on this momentum. We do have issues with the broader market already anyway, because what's really happening is if we go to the equal weighted, I'll just go to RSP, but there's other ones that you can go to. If we go to the equal weighted S&P 500, we have a slight problem, and it'll be very, very obvious here when it appears. Here you are. So S&P 500 moving up higher, all-time highs. Equal weighted has found resistance around this 118. This is the equal weighted Invesco. I mean, you can go to any of them. It's finding resistance around this zone, okay? So in reality, we haven't actually seen any real progression with the new all-time highs. And yes, we had 2 new all-time highs on the equal weighted S&P 500. But right now we've had a lower high. Okay, and that is worrying for the markets. Now, if we breach this level, we can then move down in the equal weighted, and I think that will drag the rest of the S&P 500, regular S&P 500 down. The reason why we're seeing this is we have NVIDIA here, these bigger companies growing, and we don't have the smaller ones doing anything. Here you are, okay? So we keep seeing new all-time highs around that same period. So this was May, we had May, right? We had June, July, and then we had September, and then now we have October, right? And we're seeing NVIDIA and the large caps moving higher and higher and higher because of the AI bubble that we're in. And that's normal, that's fine. However, it is a risky situation. And like I mentioned, if you're not seeing the broader market doing well, there is something not going well with the broader economy as well, okay? Everything that we're seeing, the growth in the economy, is all down to data centers, AI, etc.